Okay, traders, good morning and welcome to this live intraday strategy webinar. Today is Tuesday, July 30th, and we are on the cusp of the FOMC. Good to be with you guys this morning. DJ, Aurelian, Jaya, Kamal, Pete, great to see you guys in the room. On the menu, obviously, we'll be covering the dollar crosses, DXY, dollar yen, Aussie yen from yesterday, still of interest. It actually broke that key support we were looking at. So that one's continuing to move lower. Euro, Swissy, dollar CAD, sterling. I don't know if anyone's trading Kiwi. It's continued to sell off pretty radically, so I'm not doing anything left on the short side at least. Gold, crude, and same gig with Aussie. If there's any interest there, we'll take a look as well. Okay, so what's on tap? Well, the FOMC is on tap tomorrow. You got the BOE, and then we have non-farm payrolls. Now, the interesting part is that this all comes on the crossover of the monthly close. So again, just a quick note, a reminder to everyone in the room, typically the environment is not really that beneficial for intraday positions as you're getting into the monthly close and open. That being said, we're at some pretty key levels on some of the majors, and the expectations for tomorrow are pretty rooted. Look, it's like a 99% chance we're going to get the cut. Overall market expectations are for 2 cuts this year. There's a 14 from some gauges that I've seen here. It's showing like a 26% expectation that we could see 50. The 50 call is far out there. I've talked to a lot of guys. It's really not that widely expected. Okay, but that would be the downside surprise for the dollar, is if they do cut by 50. If they cut, and again, the expectations are for the next one being in September. If they cut and they keep that door open, everything as is, again, I'm still looking for possible exhaustion, maybe another push higher in the dollar before it pulls back. And we'll look at the moments and we'll look at the levels in a moment. But the expectations are already rooted. I was reading through some stuff, guys, and I can't remember where I saw it, but there was something that suggested that although every meeting is live and we have a press conference with every meeting, if the Fed were to cut, they would offer updated projections with that. This whole every meeting has a press conference is new, right? This year with Powell, Yellen had the quarterly meetings. That's when the disseminated figures were presented, and that's where they came out with their press conference. Now it's every press conference, but we're still getting quarterly projections. So we'll see if that comes out or not. Again, we'll hit that tomorrow, but the expectation is there. Okay, for the DXY, and this is what it looked like last night. The big focus is on the fact that on the weekly chart, we are essentially pushing through that slope from the 2017 highs. Now, again, it's only a 2-point touch. You can count it as 3 if you count these consecutive weeks. Last week, I thought was the 3rd point, to be honest. So we need a weekly close above if this is going to be a breakout. But nonetheless, we're still in a precarious spot. As we always say, when these massive confluence regions break, these key slopes break, you want to see acceleration. You want to see wicked pullbacks. Okay, you want to see turns in price. So if this is a legit breakout, we've already gapped above this 618 a couple of times earlier in the year. We'd want to see acceleration. The next major upside target is 98.42. It's 100% extension of the advance right off the low, and it's the exact swing highs that we made prior in the year in May. So it's critical here. And the levels, I think, are super clear heading into the release. Here's DXY on the daily. Not the cleanest thing from a structure standpoint, but again, there's your high. There's your 100% extension, 98.37, 98.42. Support at this point, you bring back to 97.75 or so. This key zone that we were looking at, it's the swing high from last year. It was the high that we made in March. Obviously, the pivot that we made back in June, and again, was really the onset of the monthly opening range break that we made back on the 23rd. So that's the level we want to see. As we noted yesterday in the webinar, 97.50 still the line in the sand to kind of get this or to validate or suggest that there's a more considerate reversal pattern there. Here's the intraday. Okay, here's the intraday. This slope has continued. This slope has continued to hold rather well. Okay, there's the bottom of that range, 98.33. There's the top of the range, 100% extension. The median line is there into FOMC tomorrow. Okay, so if we get the spike, if the dollar rips, two things. That would be a great area for the market to fail. We'd start to look to fade positions against the high that is spiked, whether it's 98.42 or 98.50, whatever. And if it rips through, if the dollar's going to rally, that's the acceleration point. Like 98.69 would just be a soft target to the 2016 open. Um, so I'm looking for a reaction, needless to say, up at these levels. If it doesn't spike, okay, and the dollar just starts to turn over, the pivot back below 97.87 would have us looking for that drop again towards last week's swing low. The 25% line converges on FOMC, or just ahead of FOMC, or after FOMC, I should say, around 97.50. So any questions here on DXY? There's a lot of different scenarios this could play out. The ideal scenario is you get that spike higher to fade. At the end of the day, if it breaks below the median line, look for that drop towards 97.50. It's important to note, as I always like to do, right ahead of these releases, guys, the market lull starts tonight in Asia. It's going to be really reluctance for traders to take on any new positioning, or if anything, it's just sort of positioning jimmering. So don't get too aggressive. Make sure that you're well positioned and got the levels in hand before we get into the release. Taking a look also at yields. I've been showing you guys this chart every few weeks, and it's still in consolidation right above the lower parallel. Right above, or I should say, it's really straddling the 618 retracement of the entire 2016 advance. Again, that's a 207. 206 is going to be the close low that we made back in 2017 there. Just a massive area. Massive area. Something's got to give on this on some point. So keep an eye there for a possible tell. If the downside break occurs, you kind of know what to do. All right. Next up on tap, that was number one. Here's dollar yen. The abomination is on the menu, believe it or not. So I was looking for a reversal or a near-term pullback off of two regions that we noted in the update last night. The first one being 108.92, 109.02, and then the second one being 109.42. If you got a bigger spike into there, I still think it's a possibility for a short. Overnight trade, or right into Asia, actually worked out perfectly. Came right into this region, probed right in that zone, and pulled back. Okay, breaking below that slope line at this point. So we want to see sort of how this reacts into the U.S. Session today. But all things held constant, looks pretty good. We're pulling back a little bit into that 108.53 target. But here's the daily. Okay, here's the daily. If things work out, you get a bigger pullback here. Ultimately, might be a decent opportunity for a nice long trade as far as sort of a swing approach is concerned. But for me, I'm looking for a move lower from that one of these two zones this week. Now, if things materialize today with a little bit deeper of a pullback, this is already has sort of the hallmarks of an outside reversal. Last time we made an outside reversal at this level was right here. Okay, and we're at that same exact zone, 38.2 of the yearly range. It's going to be the swing lows that you made for the opening range in May. Momentum holding 60, right? So the hallmark is there. Watch today's close. If it turns out to be an outside reversal, all the more conviction on playing the pullback. Here's what it looks like on the intraday. So last night, it was that 108.93 area, 92 area, 109.02. Again, a nice zone, right? And you saw divergence into that high, nice reversal pattern, taking us back below the weekly open, right? So we want to see that sort of hold initial resistance if it can. 108.18, next major downside target, and that's also slow. So looking for a reaction here. Looking for a reaction here. If you're holding shorts, if you played the shorts, clean it up a little bit towards the weekly opening range low. Again, we're heading into that low, right? So this thing could travel sideways, maybe drift higher. Um, I'm not going to give any major credence to moves that we see over the next 24 hours, but all things held constant, it's the fade opportunity below 109.42. And again, actually at this point, bring that down. That's 100 off the low. Really nice area if it was going to fail. But slope comes just ahead of it. So really, let's just gauge how the release comes out. Looking for a move deeper towards 108. Any questions on dollar yen? Okay. Next up on tap, Aussie yen. An interesting yen cross as well. Yen strength is still the dominant theme here, as well as Aussie weakness. So it's getting a double whammy. The basis for what I was looking for yesterday was if you're going to get more kickback from that. It's a nice 100% extension. 618 retracement. Again, my favorite Fibonacci confluences. Here's what it looks like on the daily chart. Here's what it looked like last night. Okay. Big zone. 100 off the high, 618 off the low. Nice pivot zone. Was also defined by the June open, right? So it was just an objective monthly open. And at this point, what you have to be mindful of is, Friday, let me say this, Friday pushed through, okay, in all fairness, and closed just below the monthly opening range. So objectively, we should be looking for a late month low in Aussie yen, right? What I didn't like is that we started this week coming into this key zone of support, and then we just bounced. Was a dead cat bounce for sure. I mean, there wasn't much thrust behind it, but it, was a position for pause. So the whole focus was for a reaction off this. If market closes right here, right now, it would already constitute an outside day reversal, but an outside day reversal lower. Okay, so that's not for me at this point where we are in trend. I mean, if it's going to be a break, great, but those to me can be some scary plays, right? A reversal, outside day reversal off the high, lower is the better, conviction trigger. Outside day reversal higher off the low would be, again, the conviction trigger. But an outside day reversal lower into new lows, a lot of times is exhaustion. It's a fake out. So I don't want to say that's what this is here, but that's what has me concerned now. The idea was if we get a hold here and a little bit more of a bounce, is to play the scalps on the long side. But with this, you kind of want to sit on the sidelines now. Okay, here's what the intraday chart looked like. Median line held, didn't even get much of a challenge before the breakdown. Made it below 74.83. That's the 618. The zone clears out. The next major level on the downside, 74.57. And that's the objective low day close for the year. Here's what it looks like on the intraday. Okay, perfect tag the median line, really clean, really nice hold. There's the slam lower, right? Even on this slam, intra session, okay, look at the 30-minute. Look what happens. And this is really nice to tell, guys, when you're actually following it lower. Ty says, I arrived late. Can I have the previous combos at the end of the webinar? Yes, sir. Remind me, DXY and dollar yen's what you missed. I'll give you the combos later. So Aussie yen, when it broke this level, right? And there's so much to look at here. I like to use all these as teaching moments, even just to remind myself, look, here's your weekly open right here. See this bounce, break. Probably wondering, is that break legit? What the heck? It just made it off the median line. So we should be looking for a move at least down to the lower parallel, just basic median line analysis, right? The break, perfect tag of that same zone. Weekly open, 100% extension, resistance, kickback. Even if you would have gotten it out here or just continue to move down your stops, you'd still be in it. So near-term stops, bring them up just above 74.83 if you want. If we get a kickback, nice hold like we did just here, on this slope, you're still looking for a tag of 74.57. And that's the low day close. That's the real tell from a lateral standpoint, just basic. And also you can dress this up a couple of different ways as far as the slope of the actual decline. Really clean price action there. I was looking at this morning. Really clean price action there. Puts the onus again on the low day close or just there below. So Aussie yen might still be a decent play for a rebound if it gets some sort of reaction to that low. Objectively speaking, right now the risk is still lower. If you're holding shorts, that's kind of your zone that you're focused on at this point, just below 74.60. Aussie yen, typically a good barometer for what you'll hear guys run with on all the headlines with risk on, risk off per se. I hate using that because it's not really an objective risk on, risk off environment, but typically a strong reactor to larger sentiment or larger shifts in sentiment. So just watch the this decline here. Any questions on Aussie yen? Here's the side by side, Ty. Cheers. Okay. Next on tap, that was last night's update. Let's hit the big boys. Here's Euro, number 4. So, Euro dollar with a nice little rebound here, right? Obviously, the swing trades are already in this, but looking for this stretch to build up here. So 1150 is a level that we're looking at. I'll show you the intraday charts in a moment, but I just wanted to look at the weekly again, as we always like to go the top-down approach. Just the optics of it, of the critical nature of where we're trading. 1107 was the low from back here in May. You got 1186 is the 618 of the entire 2017 rally. Cool. You broke and closed below, finally, that lower parallel of the pitchfork we've been following since the 2015-2017 lows. Okay, that puts us bearish. Below held. 618's a key pivot. Got to break through that, okay, through that parallel again, because that was so solid for so long to get any type of conviction that this was a false break or that there was a reversal pattern, what have you. And below this, there's a long way down. Right there, we have some near-term targets on the scalp chart, on the intraday chart, rather that show targets at 1080 and maybe 1060. But at the end of it, it's basically 110 is the risk to the downside if we break. Big event risk on tap, close of the month, non-farm payrolls right after. It's going to be a really nice 72 hours, let's say. So just objectively, the larger picture here. Now, Euro on the daily looks like this. Here's the pitchfork we were following off the yearly highs and the yearly low that we set in May. Boom. Here's the median line. Watch the daily closes. Okay. Again, the low objective swing low for the year held and a big sort of washout on both sides. We hit resistance and tagged 1186 and pulled back and hit support and tagged 1107. Remember, I always tell you guys, when you get these outstretched moves, a lot of times, you just play that range as an opening range, essentially. So it highlights the key regions we've just been talking about. 1186 on the upside, 1107 on the downside. That was basically what was covered with that singular day range. We've been in that ever since. Okay, we've been in that ever since. So there's not really much to get excited about here. If we fail, to close today above this median line, here's support. Here's resistance. If we fail above this or to close above this, this just could be a little bit of a fake out. We'll continue much lower real quick. But if we do start to build and the dollar washes out or the spike fails at the lows and then pushes higher, that's your signal. That's your signal for the right time and place for this to happen. Again, a very objective monthly opening range break. We registered a low on the 25th of the month. As far as opening ranges are concerned, that's already played out. Here's the intraday. This is the first test, really. No change to any of the levels. So this is the levels as they were presented on the 29th, or 28th rather. Here's the same pitchfork. Okay, we opened the week, rallied into the 25%, into the 75% line. We just tagged the upper parallel. If you're holding longs, this is, let me take a step back. If you're in it from the swing side of the approach, guys, don't change anything. But if you jumped into a long last night, anything from I'd say north of 1130. You kind of want to clean it up here a little bit. This is the first test of the parallel resistance, and the low close 1130 now is near-term support. Okay, that's sort of the focus right now. The big region, the pivot, still going to be 1186, 1182. 12 is just a soft target, nice pivot there. It converges on the 75% line at this point, but really, I told you guys yesterday, I still think that's the level to beat, is 1220. Not just because it's a 38.2, but just to kind of clear the range, looking at this from the daily chart. If we get through that, you'd alleviate the opening range break low that we made for the month. It would put you back in the confines of essentially that longer term slope in blue. So 1220 would be sort of, okay, looks like we put in a more significant low in euro. All things held constant, guys, to put things on paper, we're testing downslope resistance here. So if we're completely wrong, euro has no hope of rebound and it's just about to collapse, well, you shouldn't see anything max above 1180, even on a spike. Any questions on euro? Does that help? See if this formation holds. Again, I hate those 12, 24-hour lull that you get right before, especially a big FOMC meeting like this. And it's interesting because the divergence, what's interesting about this FOMC meeting, guys, is that everyone, the cut is not the big deal, right? It's how deep the cut is and if it alters the broader aspects for what we think for rates this year. Markets are expecting, have already eased, essentially. If you look at expectations for where rates will be back, I showed you guys this, I think, yesterday. I don't want to bring it up again, the CME tool, but what rates will look like in December, right? We're like 1.9, I think. So it's the deviation between what the markets are calling and what the Fed is suggesting. And as we all know, Fed's been horrible with forecasting rates lately, or historically, I should say, not lately. Okay, so that's euro. Want to see a reaction right here, an immediate risk into the US Opens for a pullback off the slope, but this is the real pivot zone that we need to clear. Near-term support 1130, 1102. If you get the breakdown, don't touch this. You're looking for like a 1050 as your first target to the downside. All right, dollar Swiss, number 5. Here's Swissy. So haven't gotten any plays on this. The whole idea was to look for the stretch into 99.52, into 99.65. We didn't get it. You know what I mean? I thought it was going to give us that last push, but ever since the start of the week, it's just been a slow mutter lower. So there hasn't been much by way of a new play to get into it. I would just highlight the levels are still pretty clean. So, well, first of all, from the weekly chart, here's Swissy. The thing that's super clean here is that slope. It doesn't look that way on the daily chart. So we're working with a slightly different nearer term slope with that, but there's that 75% line, right? Is that a hold? I don't know. Here's what it looks like on the daily. This is off of this year's high, whereas this one is using last year's and this year's high. I'll show you just real quick. Right, so you see that 50 line there? I know that's messy. Let me do this. Okay, this is the one that we're looking at in the weekly chart. Does that make sense? There's a 75% line, resistance, resistance. Maybe is the operable slope. I always default to going with the nearer term slope for the immediate chart that I'm working on just to get a closer picture. And that puts a 75% line up there. So this was a justification of why we were looking for that stretch. Again, with the FOMC on tap, you still could get it, right? We're completely on defensive mode here as we get into the close of the month and this major event risk. But that's still my zone. That's still my zone. So on this pullback, if it's just a near-term pullback within the advance, price should basically not, surpass 98.73 on the downside. It's just an objective pivot in price, but how many turns you've gotten at this level is pretty profound. So there's the break and the source of the acceleration, right? So it's just a nice spot, lower parallels there. If we were to get and see that hold, you still get that spike towards 9965. And that's where we would look for a larger reaction. It's the objective monthly opening range highs. At this point, you're heading into the close of the month with the monthly range intact. So once we get this thing clearing in Swissy, I think we finally get a decent bias. Really nice breakout of that consolidation pattern to the upside. I don't see Pooja here in the room today, but she was one of the subscribers who kind of pointed that out, and it worked out with the breakout. Here's the pullback. Look for support ahead of 98.70. If this is still going to make that thrust into 99.65, I wouldn't want to try it alongside if we get below the parallel. So I'm kind of stalking this as a base scenario to offset any dollar shorts that I might be in. Might be the nicer play for the breakout, or for the dollar strength if you do get a dollar strength story tomorrow. Questions on Swissy? All right. The next one was dollar CAD, number 6. So Looney with a similar scenario, only the pullback is not quite as continuous as it has been in Swissy. Swissy kind of just continued to fall. This thing is ridiculous with how many up days in a row that we've gotten now. And today's just adding fuel to the fire. Here's consecutive candles. How many consecutive up days that we've seen? It counts this day as a down day for some reason. This is a glitch in the matrix or something, because this is actually, these were both up days. This was like a doji. So you're basically working on 6, 7, 8 days consecutive to the upside after a doji off the high. I mean, I don't have any major lateral levels. This was a break of the monthly opening range, so we're looking for that late month high. It looks like, it still has the thrust in there. Momentum is still, not even testing 60, so there's still more upside. Do I want to get long dollar? Not really. So this one's kind of one of those ones where, again, you're looking for tomorrow to offer some sort of whipsaw action to pull back against the full trend or against the primary trend. So if we're moving higher, fade drop, or if this rips higher, this is our key zone. This is the zone we've been looking at for a while, 32.25, 32.38. It's that swing low for the opening range of June, 38.2 of the basic drop off the highs we made in May, and a decent pivot in price. Again, go back and look laterally. See how many swing highs, how many swing lows we've registered right off this mark. So if you're in it on the long side, you're comfortable, I think. I don't really think you should worry bringing up your stops. If you're looking for new exposure, the play for me would be a short off 32.25 for a pullback, or if this thing slams lower, 30.85, both areas of which, if it is heading higher, that's where failure would need to happen. And maybe we're expecting a little too much tomorrow, guys. And this is always not a risk that you run when you're trying to intraday trade or near-term trade major event risks. Like, who knows, right? What Powell will end up saying, or what the reaction could be with the market once it finally hits. But we have to map out the levels and make sure that everything's sort of set so that we're just operating. We're not trying to make snap decisions when the release comes out. We're just basically trying to assess them. All right. So that's dollar CAD. Any questions on Looney? Okay, just a quick reminder, we get those GDP figures for CAD on Wednesday, and it's not a double whammy employment Friday, so watch the dollar. All right. Anyone in sterling? Because that support, also another one where it just broke to the downside. Consolidation pattern we've been looking at for a while. The longer term charts, here's the weekly, how critical of a zone this was. We've talked about it for so long. It was the exact low that we registered early in the year rather, 24.33 into 23.77, that 50 pip range, caught the lows into their open of July. Last week we closed right there, just below. Here's the continuation and break lower. Even the 618 extension is taken out at this point. This is the weekly chart, so obviously we'd want to see a weekly close below this, but man, that's an objective break of the yearly opening range. That's an objective break of the low week close, the post-Brexit low week close. Man, that's bad news. If this is a fake out, this would need to correct pretty quick. All things held constant, look out below. This is probably pretty problematic for sterling. So there's nothing really to do here from an intraday perspective. But I just want to bring that out, that we broke. And this is the break what we talk about all the time, that when you see a break, you don't want to see meandering price action. You want to see that accelerated thrust, that just domino effect, cascading effect. As all these limits get taken out, all these stops get taken out on anyone who's trying to fade it, people jumping in trying to accelerate the move, it just washes. There's no liquidity. So man, first oversold reading that we've gotten since back here. And that lasted for another, like 7 days, 8 days before it finally corrected or even gave you a rebound. But the broad dominant trend remained lower. So I was actually mindful of trying to play a rebound off this, but there's just nothing in this here at this point. We'd need to see some pretty corrective, like radical whipping action to the upside before we'd even try that. So sterling shelved at this point. We'll put that on the sidelines, but you got the BOE, you got the FOMC. I mean, it's got every event risk from every angle coming over the next 3 days. So who knows? Maybe you close the week well above that post-Brexit low week close again, then it's a whole different story. But as of now, super caution on sterling, something to watch and track. Kiwi. Anyone trading Kiwi? Here's the dollar CAD unchanged. Here's the sterling. It's the breakdown. We already took out 22.27. So from a slope standpoint, I don't have anything to way lower from here. Here's Kiwi. So, last week, we highlighted the break below the yearly open, which was 67.05. Shifted the focus lower. It's been holding this channel. Downside targets were 66.52 and 66.36. That's kind of the limits where I really wouldn't have tried anything beyond that. We're testing that parallel, right? Here's Kiwi. Well, kind of making a deeper move at this point, but here's the daily chart. Here's the daily chart look like last week. As we were turning from this big zone, there was the 2019 open, break and pivot, shifted it focus lower. This was the parallel we were sitting at yesterday. We closed there just slightly higher. Look at this. 618 gives you 67. We've adjusted this obviously for the new high in price, guys. So 66 essentially is going to be the 618 of the entire rally off that low in June, or excuse me, the low in May. That's your next downside target here. And it's ridiculous because I tell you guys, I always hate these really sharp channels. The breaks typically are crap. But even on this, it was so clean that it held that key zone that we were looking at as resistance. And here's the move lower. Look for reaction at 66. Interestingly enough, that low candle close for that wick, the close is 65.98. Further highlighting this is nice zone, this pivot zone in price. Aurelian says Aussie of time. Yeah, we'll take a look. So Aussie's, let's do that real quick. Here's 9. Aussie's a very similar scenario, but the breakdown was much sharper. right? This upslope, you guys, I told you it was all about 69.57. This 50% retrace, there was a convergence there with the lower parallel. It was the low day close for the month. There was tons there. And it didn't even hiccup. I mean, this thing sailed through. We tried to even tag as resistance, didn't even get that high. Boom. Uh, you know, if you're holding shorts Aurelian and you're looking for limits or targets, 68.85 was the 786. Really clean pivot here that we were looking at on the ascent even. So, an area of interest, okay, on a daily close basis. You want to see what happens around that. Your next major level is the 2016 low week close, 68.55. 68.55. Now, I do want to add to this. I didn't think I'd have to work with this level yet, but here's the low day close for the year at 68.75. So let's do that. Oops. And just for the sake of clarity, I'm going to go ahead and just get that off the daily chart. Let's keep it just real clean here, simple. So that's what I'm looking at with Aussie. I mean, man, this thing, and to recall, with all due fairness, I probably should have been more aggressive on trying to play the reversal off this level too. You guys know we've been watching this zone literally since the start of the year because it was the yearly open, 70.42 into 70.20. How many times have we pivoted off this? Um, that should have been a clear indication last week as we were kind of just a really nice level on how we turned. Here's the close on the line chart. I mean, this is like textbook. Support, 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 break, resistance, resistance. Did I think it was going to get this fast, this big of a drop? Not really, but here we are, right? Another one that's just had a consecutive, what is this now for this? Must be like 4 or 5 days. Yeah, this is going to be the, oh, wrong candle. Eight days. Today would be the 8th day. Watch the low day close at 68.75. Low week close comes in at 68.55. And let's just see if there's any slope here to work with. Interesting. Very interesting. Okay. I suppose it's appropriate heading into the event risk that we are heading into, but so 68.75, that low day close, I still would watch that lateral level. It's I guess stressed out on a close basis, but slope comes in just a little bit lower. You saw the pivot that you got there on that 75% line. I don't want to stress that. It's not really sort of a uh, conviction reversal on any of these slopes yet. We kind of sailed through the median line, but we did see acceleration there. That's encouraging. Lower parallel comes in just lower. End of the day, you know, the breakdown of the upslope, I still think, is just leaving this lower. The point is, I can't chase it on even an intraday level or trade lower than this. So you need to get a recovery towards the median line. I'd start to look for some possible resistance there near these highs, I guess you put in Asia. Might be a decent position. But man, you're basically looking for 68.55, 68.75 on the downside at this point. So Aurelian, I hope that helps on Aussie. I haven't, ever since that break below 69.60, I haven't really known what to do there because it's just been a straight shot lower, right? But those are the levels I'd be looking at if you're holding that short. It's a nice spot here. All right, that is Aussie. Next up, I just want to take a quick run through on the commodities. Here's gold. I'm going to put a piece out on daily effects later on this setup. So the pullback, well, let me take a step back. Here's the daily chart, right? You guys know the upside targets that we were talking about ever since the breakout was 1433 and 1451. Both of those more or less gave you decent pullbacks. Specifically last month, the start of this month, when we broke through that, we reversed right off 1451. It's a longer term 100% extension. Hey, Aurelian, you're more than welcome, sir. Appreciate that. And then you marked this reversal pattern right off it. The whole idea, and last week, if you recall, we did post that outside day reversal right off 1433 again. So if you recall, I'm looking for a new low, just even on a reversal pattern type of play. Now, you didn't quite get a drive into the monthly open, which is 1409. And this rally here doesn't necessarily invalidate anything major. Remember, just like we just noted on some of the other charts, here's that big outsized candle. So we can use this essentially as an opening range break in and of itself for this range. And it highlights 1433. And on the downside, it's a little bit higher, but I'd still be focused on the monthly open at 1409. So I do not want to get faked out in gold. I still think that there's risk here. Here's the same targets that we've been following. Nothing's changed. Okay, we'll cover crude in a second. Nothing's changed, okay, since last week. If this is a little bit of a break, 2-point trigger or a 2-point resistance line break, looks like we tested support, fine. Maybe get another thrust back to 1433, 1436 is the 618 of the drop. You know, I'm still not buying it unless we get some sort of clearance above that. Then you're looking for another run at 1451. Looks like a fourth wave coil tie. Could be. 3, 4, yeah, could be. Yeah. In which case you would still need that last low, right? We'll see. Look for exhaustion ahead of here if this is going to move lower. And we'll just move this to account for time and slope. And bear with me, just want to see what this looks like. This is like real near term now, but I just want to see if a lot of times this can also just help you give expectations for time. Don't want to necessarily stress this, you know, but it's actually a pretty decent pivot right there. 1422 is the lower parallel, the lows we made last night, right? On the upside, heading into FOMC tomorrow, basically you're looking at 1436, 1433 resistance. Questions on gold? We are broadly bullish, but I don't think I'm looking for a new low first. Crude oil takes us into, that was 10, this is number 11. Here's crude. So this one, haven't covered it in a while, but let me take a step back. It hasn't done anything in a while. Here's from the 25th. We had that real tight range that we were trading in all last week. And heading into the close of the week, we were looking to see if we can get that break. Again, the major resistance zone is 58.15, 58.50. That's the breakout zone. If we settle below 54.60, that's objective, low range breaks. You're looking for 53.80, and then again, 53, just below 53, 52.90 is the 786. At the end of the day, we're still in this range. Nothing has changed. We're still holding the same slope. You know, that parallel held for resistance. It even gave us another resistance thrust before the break that we just saw. And guess where the upper parallel is? That same range high. So I'm going to I'm going to move this to this just to highlight that same zone. Resistance, support. Now at the weekly open from last week, which was support, support, support. That's just below this week's opening range low and converges on slope. At this point, you can choke up, excuse me, that breakdown level from 54.60. You can choke that up to 55.72 at this point. And let me just see what this looks like. Right. Well, it's going to just make things messy. That zone is pretty critical anyway, so watch that. Watch that. Base case scenario, again, for crude, is very similar scenario to gold. Even if this is like a really clean 5-wave, I'm just looking for a new low, a final stretch. Remember on that drop, we were looking for a tag of 54.52, 54.60. We didn't get it. That was frustrating. And then what have we been doing since? I still want to see that jackknife lower if possible. So crude testing the patience, but I've found over the years that those are usually the best trades. So watch for a washout in crude, I guess. Questions on crude? That covers everything on my end, guys. Do let me know if you have any specific questions or setups you want to cover. A quick reminder, I'll be out on Thursday, so I'm not going to get to give you guys another webinar ahead of non-farm payrolls. But look, for FOMC tomorrow, make sure that we're focused. SPX coming right up, Pete, and DXY combos looks like this, Ty. Remember tomorrow, it's not about the cut. It's about the commentary. If we get the updated quarterly projections, I couldn't find the reference tool where I saw that. If we get the quarterly projections, maybe at that point, let's reassess. But all things held constant, it's kind of still up a little bit higher into resistance before we start to run into anything major that should prompt sort of a fight of this advance. SPXP, I'm always up for a challenge, brother, but here's what I've been looking at. This is what, just to put things in perspective, this is the same slope, Pete, that we were following the entire rally. Last time we approached this slope was back here. It was coming off this parallel, and we said, oh, great, break slope parallel support. That's awesome. It held after a quick washout. Then we looked at it again here, looked like it broke parallel support. It came right into the lower parallel. This is just the same slopes we were working with, the extension off the low. And then look what we've been doing ever since. Test. So Pete, what's that? Is that a breakdown? I'll tell you what I'm looking for. Looking for resistance ahead of 3020, 3019. Even if it rips higher, that's what needs to hold. And this is really near-term price sort of studies. But if it were to rally, the convergence there would be sort of real sweet for it to fail. I guess the 4-hour, what was it I was looking at? The high bar close for the 4-hour chart is basically right there as well. 3020 would need to hold intraday spikes to favor lower move. But you don't ever want to be that jackass always trying to call this short. But every time we've gotten those breaks, they have led to some play. They just haven't lasted long. And if this is the last series of that slope of all of this, which is held since the June open, the May lows is where the origins of these are from, then I guess we should be looking lower. Let's see if this thing can get any drive. Again, ahead of FOMC, I don't think we'll get a decisive break one way or another, Pete. But just from a slope standpoint, it's starting to get cute. It's always a sign of something decent's about to happen. All right. Any other questions, guys? We will go ahead and wrap it up there. Don't forget to jump on. I'm not sure if Jamie's decided to move his webinar, guys, from Wednesday to Thursday this week or not. but he will keep you updated. And always remember, the webinar schedule always gets updated right on the homepage, guys. So if we ever make any changes, we try to keep this up to date as possible. Jamie's on point tomorrow. I will see you guys back on Monday in the free session, and then back on Tuesday here on SB. As always, best of luck during the event risk. Watch the monthly crossovers, reduce position size, make sure you're being a little bit more nimble as we get through this little flurry of BOE, FOMC, and non-farm payrolls into a monthly open. Stay light. Best of luck, guys. I'll see you next week. Cheers.